Hey traders, Nick Shaheen here looking at Ford. So let's talk cars for a little bit. Watching CNBC, not that I'm looking for advice there, but I was trying to keep a pulse on what people are looking for these days. I noticed that Kramer was pumping Ford as a buy. Not that I'm disagreeing with him. In fact, I did trade it for the long side ahead of the earnings. It was a nice short-term win. I did bail out of my longs then. They were via calls, and I saw some things that told me to get out for now and see what happens, and then maybe we can reload. I don't disagree with them as far as the turnaround prospects. I don't disagree with the fact that overall the sentiment should be bullish because the macroeconomic conditions warrant upside. So assuming that markets are higher, Ford has an opportunity to go higher. Now, on a day where we thought that the sky was falling from the China headlines, Ford ended almost flat after rejecting the lows. So here's what I see as far as short-term price action. I'm going to bring my crayon and start marking it up. This is where I do my best thinking. All right, so the earnings were better than expectations, obviously, from the price action, but now we have this little cluster up here. So what do I do with that? Easy. I draw two lines. A break of either size of these will carry in that direction. So if they break above it and close above it, they're likely to overshoot higher. Otherwise, they're likely to fill the gap. Now, they say that markets like to fill all gaps. Not all of them get filled, but a lot of them that stick out do. I'm trying to look back here. I don't see any open gaps flagrant like this. We'll zoom out a little bit longer in time frame to see. But more importantly, I will look left and notice that this is, in fact, let me do this first to bring in a little more history. Price action. Okay, so, and let's mark it up again, and I'm going to highlight another area that is probably more important to someone who wants to start being long Ford now or not. So if my time frame is for the really long term, I want to own Ford and stay long it for a long time because I think they're going to turn it around, I shouldn't worry about entering it now or Monday or Tuesday. I should just buy it. And if I'm leery, I'll buy half and then buy half later. But if I'm looking to enter from a trading perspective, so more so midterm, short term, I'm worried about it, then this whole zone is resistance. It's supply. What happened here is this was a pivot zone. They tried to hold it and then they fell apart. So when this happens for a long period of time, they come back to it, it presents an opportunity, if they can break above it. But usually they don't just slice through without an event, since we just had an event. So they're likely to meander here, maybe dip a little bit and attack it again and do some sort of a cup and handle, and then the rally comes to go to 13 or higher. So this whole mess will be a resistance here because this is where bulls and bears agreed for a while, consolidated. That's another term for it. So they consolidated and they lost it. They came back to it. Whoever fought over it here, they're going to fight over it here again. So thereby creating some sort of congestion. What does that mean? It means timing-wise, it might be not perfect unless the market's set new all-time highs right now, this week. But we have a whole bunch of headlines that could go either way. So if I'm looking to go long Ford per the Kramer recommendation, I don't disagree with it if you're playing it for the long term. But maybe I would, here's what I personally would do. I would add an alert. So if they can close above this line, and it's not a hard-coded line, but at least the recent highs, then I may chase it. Until then, I can put another alert here to tell me if I'm long it, I should probably get out here because they might fill the gap. If they fill the gap for some reason, I will load up on it. If they come close to filling the gap, I could go long it. Or I can go, it depends on my time frame. If it's a really long-term time frame, I shouldn't mess around with it. I should buy it. So how do I go long a stock? I can buy the shares and put my money at risk right here, right now for the long term. It's an asset I can hold. I mean, it's cheap. It should be cheap. Last time I checked, it was cheap. GM was cheap from a price to earnings perspective, and these are traditional stocks, so that's an easy way of looking at it. 14 PE. So let's see GM. I'm not going to compare it to Tesla because Tesla refuses to know it's a car company. Price to earnings. So GM is a lot cheaper from that perspective. So there you go. but it's not expensive. At 14 PE, I'm not likely to get killed on it. So let's say I'm a little hesitant, I can use calls. And if I do so, I use longer dated calls so I'd have time on my side. The difference between owning calls and owning the shares is that there's a time starts ticking as soon as I own the calls. Whereas owning the shares, I'm willing to hold them forever. I really don't have time working against me with the calls I do. Selling puts is another way of going long the shares. So if I wanted to buy them at 10, but I don't want to start right now until it gets to 10, so I can sell the $10 put, I'm committing to buy it at 10 if it falls below it. And for that commitment, they give me money right now. So I'm basically selling somebody else a lottery ticket or some protection at 10, saying that somebody else say, hey, you own shares. I'll take them off your hands if Ford goes below 10. Here's my money now. That's how the sold put works. I don't sell a naked put unless I want to own the shares, unless I can own the shares. If I don't have enough money to own the shares, and if the price goes below and they put me to stock, I'll have a margin call on my account saying, hey, you said you'd buy these shares, bring in the money to buy them. The price is below, and whoever bought the lottery ticket now wants the protection in effect. So that's one way to trade it. I can sell a put spread if I don't want to buy the shares, and I limit the risk, and I still create income. So plenty of ways going long forward, but first you have to decide how strong is that resistance. So let me zoom out a little more, go to a weekly. Okay, now you see the damage from the exuberance up here. So this is a weekly chart. Every candle is 1 week. And now you can see how bifurcated it is at these levels right here. Maybe bifurcated is the wrong reason. How contentious the level is. Pivotal. Okay. So support, right? It's been support for a while. This is 5 years worth of data almost. And then they lost it. And they fell however deep they wanted. They got to it. What are the odds of them just bursting right through? I rarely see that without a real reason, a specific reason. So it has a neckline that it's contending with, which is an opportunity for the bull. But onus is on the bulls to break above it. Another trend line would be this guy. They're making headway, but they both kind of agree that right here, something's got to give. We've got higher lows knocking on a roof. So either we dip, which won't be the end of the world because then they'll do this and break out of it eventually, or just break out of it. So tightening range, something is going to happen in this circle right here. And given that it's not an expensive stock, and if the markets in general go higher, a good bet is to be long forward. I'm just trying to put a spin on it for time frame. Depends on personal time frame and how the portfolio is set up. All right, Nick signing out.